Hey, what's up? Welcome back to the channel. If you watch my previous videos, you will know that I'm a big fan of NIO. I think it's a great company. They have great potential, great cars, and I love the technology behind the company. But on the 1st of March, on Wednesday, they reported their Q4 and full year report, and it was really difficult to digest. So today, I want to talk a little bit about what happened and what are my thoughts on the company at the moment. So thanks for tuning in. With no further ado, let's jump right into it. So NIO just reported its full year 2022 financial results, and just straight away, before I say anything else, it was a financial disaster. It was much worse than I thought it would be, and they performed very poorly on a financial point of view. Now, there are also some good points, and we'll go through the good points first quickly, and then afterwards we'll look at some of the big downsides, and which helps us to explain why the stock is again dropping and why the performance of the stock obviously is very bad at the moment. So, jumping out with the good points first, let's have a quick look what's actually good. I think one of the key ideas and key results that were very good were their deliveries. So we can see that their deliveries in 2022 in the Q4 were 40,000 cars, and that is a really stark contrast to last year's Q4 of 2021 at 25,000 cars. So that's a huge jump of, how much is that, roughly around 60%. So really a big jump. And we can also see that it's a huge jump from last quarter, the Q3 of 2022, of roughly around 32,000 cars. So their deliveries have been fantastic. They're growing at a really good rate. What is that, roughly? Yeah, 60%. So and of course, with those increases in deliveries, we also have a very nice increase in total revenue to around 16 billion renminbi. And again, also here, we see that is an increase of 62% from last year. And that's, again, also here, really good performance. So the way it looks like is that NIO is really gaining traction. They're having this, strong kind of momentum, especially in the Chinese market of selling cars. And I have a lot to do with Chinese people, with the Chinese market inside China. So I see there's an increased number of NIO cars on the streets, especially in the big cities. So the cars are really popular. There are 2-3 other brands that are also extremely popular. That's BYD, of course. We can see increasingly a lot. We can also see a lot of Xiaopeng, so Xpeng. The Chinese name actually is Xiaopeng. We see also a lot of cars on the street here, and of course Tesla. But NIO is definitely, in China at least, one of the top 3 or top 4 electric cars that you can actually see driving around on the streets. So that's definitely good. They're having momentum, they are popular, people like the brand. But that's pretty much where the good news ends. That's all of the good news that I was able to find in that whole report. There were some mentions of the technology platform 2 that they're rolling out, and that was good and that's successful, kind of going on. But in general, that's it. Now, jumping over into the bad news, they're definitely outweighing the good news. And that's obviously the problem. That's why, investors are selling the stock. That's why people want to get out of the stock, because the bad news are just kind of a little bit overpowering all the good things in here. And looking a little bit in detail into the bad things, we see that they're mainly financial rather than operational, right? Operational, the company has done good, but financially the company has done, well, fairly bad, if I should say like that. So to understand their financial issues a little bit better, let's jump over into the income statement and see what we can actually learn from there. As I've mentioned, total revenues were very good at roughly around 16 billion. That's that strong increase that we talked about earlier from 13 billion 3 months ago and roughly around 10 billion in the same month or the same quarter last year. So they did really good here, but we can see that they have an unbelievable increase of cost in sales, and that's the biggest problem that we have here. So it cost them to produce that roughly 15 billion out of the 16. So they're ending up with a gross profit of only 621 million renminbi, compared to when their revenue was much smaller, they still made 1.7 billion renminbi. And that's a big problem, right? Because what's happening is that their margins are compressing and their margins are getting smaller. And that's really not what we want to see. But it's not an issue only to NIO. Even the most successful EV company in the world at the moment, Tesla, is having a little bit of the similar problems. Their margins are also compressing. And that's an issue because generally speaking, batteries are getting more expensive, raw materials are getting more expensive, labor is getting more expensive. So we're in that problem of increasing costs. And of course, that has a negative impact on your gross profit. What NIO states is that they also had to do a lot of write-offs in their inventory. So that's a bit of an issue, because that will mean that they know that they have inventory that they won't be able to sell in the future. And they mentioned that that's one of the biggest reasons why their margins are so low at the moment. And we'll see next quarter what's going to happen, if they have to do those write-offs again, or if it was a one-time write-off. But we'll learn more about that probably in the next few months or next few quarters. But if this is an ongoing issue, that will be really, really bad. So I hope that's like a one-time thing and we would kind of be over with that soon. Then what we also can see is that there is a big increase in research and development. So from a year ago, it has almost doubled from 1.8 billion to 4 billion, right? So generally speaking, I don't mind if there's a lot of money going into research and development to develop products, to develop, the company as, in general. I think that's a good thing. But at the moment, with NIO actually almost being unprofitable on gross margins already, that's a little bit of an issue, because they're still pumping a lot of money in there. And it's expensive. They can't really afford that much of research and development at the moment. So they've got a total operating expenses of around 7 billion renminbi, which leaves them from a net loss from operation of roughly 7 billion RMB. So they're highly unprofitable again here. And there was a good trend a few quarters back where it looked like they might start to become more profitable, but then, they just never reached there. And we see now that their total net loss is almost 6 billion renminbi. And that's really, really a bitter pill to swallow. That's a lot of money that they're losing. And, we're talking of a quarter, right? This is not in a year. This is in a quarter. So that's a lot of money. So there are obviously issues with liquidity. How long can NIO continue to do like that until they have to take out loans or money from the banks and so on again? So it's probably just a matter of time until new borrowing needs to flow into the company. So to understand if the company really has a liquidity issue, we can jump over into the balance sheet and compare how much cash do they actually have compared to how much cash they're burning through every quarter, right? So we can see that they have cash and cash equivalents, restricted cash and short-term investments of roughly around 40 billion renminbi. And let's say that they're losing roughly 5 to 6 billion renminbi every single quarter, means that they can still safely operate for another 2 years in the same manner that they're doing it at the moment, right? So I don't think that we actually have a liquidity problem here. There's also, of course, always the possibility to take out more borrowings, which I don't like. I mentioned it earlier. But I don't think that the company's going to go bankrupt, or that next year there's no more operation with NIO or whatever. So I don't think that that's really a big issue. I think that the much bigger issue is that margin squeeze, right? Because once margins come down, it's really difficult for a company to continue operation, especially at still pretty small volumes that NIO is operating in, right? So I think that's much a bigger problem than the debt that they have or the operating loss that they're making at the moment. Is really the margin squeeze. And that's what investors are scared of, right? You don't want to be in a business with very small margins. You prefer to be obviously in much higher margin businesses. And that's what NIO kind of was throughout the board. We compared it earlier. They had like 16 to 20% margins, which are fantastic, right? And now that has just dropped to like 4 or 5%, which is, a big issue, right? So that's why the stock obviously is selling off. Now, from my personal opinion, I do also think that's an issue. Yes, I fully agree with all of you guys, but I also think that a quarter over quarter doesn't really show the big picture of a company. It takes longer time for companies to develop, and it makes much more sense to look into like yearly results and so on to see what's happening, and look out 2-3 months and so on. Because if we look at example the write-offs on their inventory, okay, so that happened this quarter, so what's going to happen next quarter? We don't really know. So financials might be disturbed and distracted and so on by occurrings that happen in a single quarter that might not happen next quarter. So it always makes sense to keep a little bit of a longer time view and longer picture on your investments. Don't make investment decisions because of one quarter to one quarter to one quarter. So that's it for me for today. Thank you very much for tuning in. I hope you enjoyed the video. If you did, smash that like button and subscribe, and see you next time. Thank you very much.